Hello, and thank you so much for visiting Trading Market Technicals. I really appreciate you visiting the site today. This short video is going to be an orientation into the mentoring room and how we are going to help teach and mentor you to become a better stock trader on an intraday basis. So what we're going to cover is we're going to cover a few of the things that you will learn in the room. Number one is we're going to cover the benefits of being a member of the room, what you're going to specifically learn from the mentors, exactly how we're going to be able to help you become a better trader, or at the very least position you to make really, really good trading decisions. Next, we're going to help you become a better trader in real time. That's very, very important. You want to be able to ask questions while the market's open. Anybody can give you suggestions at 9 o'clock at night. We want to make sure that you understand how you can do that while the market's open. And there's going to be teaching and mentoring. And last but not least, we're going to give you a schedule of the hours that the room is open, and more importantly, the hours that we are going to provide specific help. So we have different levels of help within the room. Some of it is lessons, and some of it's actually trading, and we're going to give you those exact times. You can clearly see here we have our disclaimer. Take your time and read that. All right, member benefits, and more specifically, what value you're going to get out of being in the mentor room and what you're going to learn from the mentors. First, we're going to discuss which indicators to follow. Now, again, we're talking about intraday here. The indicators that we watch will be explained in a couple of seconds. The indicators are what we would call the backbone to what you might read on a price chart itself. So it's kind of like what's going on under the hood. So you want to see what's going on the chart, and then you want to have an idea of what's going on behind the chart. And that's what the indicators are going to do. I'm going to explain that in a couple of seconds. Number two, we're going to look at all the sectors to watch. Now, the important part of watching the sectors is you have the individual stocks, and then you have the broader market. We're going to get a feel for both of them so that we can get what we call a bias, which means do we want to be a buyer or a seller on that day. And watching individual stocks in addition to watching the sectors will help us have a much better view of the overall picture as opposed to what's going on in just maybe one individual stock that we're in. So we're going to discuss which sectors we watch to help us have that conviction. Next, we're going to cover trade management with you. Now, trade management is a very detailed process. Now, what I want to get across here, though, is you could find 100 ideas a day, and 100 different people could get into the same position. What we're going to teach you is how to best manage that position to make sure that you minimize your risk and earn what you're supposed to when you have really good ideas unfold and you're in them. So the trade management is really where the money's made. That's the part that you want to write down there. So we're going to walk you through trade management while you're in a position. Next, we have trade setups. As we said, the setups and the entries aren't really that hard to find, but the trade setups do need to be specific so that you could learn to set up what's called a really good risk-reward scenario. So how much money you have to risk on a trade in exchange for the potential profit. We're going to get into that in the trade setups during the mentoring room as well. Next, building a watch list of stocks for the day. Now, there's thousands and thousands of stocks you can potentially watch every day. Each morning prior to the market opening, which we call a pre-game meeting, we're going to help pare down the list of stocks that you're going to watch, which is kind of like going on a treasure hunt so that you're very focused when the market opens and you're only looking at certain stocks. And last but not least, within some of those stocks you might be putting in your watch list is a very specific type of trade, which is called a gap trade. And we're going to discuss that at the end of the video. All right, indicators to follow. We discussed that the indicators are what's kind of going on under the hood. I guess it's kind of like having your dashboard on your car where you know the car is moving, but you want to see if you're overheating, you want to see what speed you're going, and that's what the indicators do. So to put a little bit more clearly, we're going to confirm when the big money, or what's known as the institutions, are involved so that we can trade with some conviction and put money out there with confidence. All right, so number one, it keeps you on the correct side of the trend. The indicator makes it very, very obvious which side of the market you want to be on. Do you want to be a buyer or a seller? Number two, we're going to help you determine if you have an edge when you're entering a trade. So think about it. You could be heading in a particular direction, but how likely is that direction to continue? So in other words, is the market stepping on the gas right now, even though it's still going forward, or is the market stepping on the gas? So that's the edge that the market indicators will give you, and we're going to get into how to use those when the market's open. And third, it gives confirmation to our sector analysis. So we discussed briefly before that we're going to look at the sectors, the broad sectors of the industry. When the indicators of what's going on in price and volume, which is what a lot of the indicators will tell us, and we'll teach you how to use them, confirm what we see on the price charts by themselves. Again, that helps us have more confidence. So think about that. Can you picture sitting at your screen with more confidence? That's what you want to have. So one of the first indicators that we're going to teach you how to use in the room is called the vol spread. Now the vol spread is a very unique indicator. I'm sure you've heard of the S&P 500. Okay, S&P 500 represents a very broad sector of the economy. The vol spread is an indicator that tells us the up and down volume ratio of stocks in the S&P 500. So what that really means in normal terms that we can understand as beginner traders is it basically means that as prices move up and down, the vol spread will tell us an indicator of the volume of the up and down activity in the S&P 500. So you kind of get a very good feel of the buying and selling pressure on top of what you see on the chart. Number two, we're going to teach you how to learn to read what's called the VIX. I'm sure you've heard this indicator. Now, just to give you a quick overview of what it is and why we watch it, the VIX measures volatility. Very often it's called the fear index. And the reason it's called the fear index is that the more volatile the market, the higher the reading of intraday movement. So the VIX is going to be an indicator for us to not only decide if we want to be a buyer or seller, but it's also kind of an advanced tactic I'm going to teach you, help us determine how many shares we are going to trade based on the volatility of the market. So as an advanced mentor, I'm going to tell you right off the bat, the more volatile the market, the more risk in the market. So you probably want to reduce your share size a little bit based on your risk tolerance. And we're going to discuss that in the lessons as well in the room. And last but not least, we have the tick. Now we said the vol spread tells us the volume in the S&P 500. The tick actually tells us the upticking stocks versus downticking stocks in the Dow. Okay, so what that's going to tell us, now there's one for the NASDAQ and there's one for the New York Stock Exchange, the tick, excuse me, not the Dow, the New York Stock Exchange. What it essentially tells us is how many stocks are going up or down at the same time. So the higher the reading to the upside, there's a lot of stocks moving in the same direction. The higher the reading to the downside, we have a lot as well. So again, the top of the slide here, how do we trade with more confidence? These are the top three indicators that we used to give us a little more conviction when we're putting money involved in the market. And again, we're going to walk you through these when we start to trade together. All right, next, sectors to watch, understanding the health of the overall market. It's going to tell us when the time is right to hold our winners longers. Now, just let that sink in a second. Can you visualize sitting at your seat saying, I know what I'm looking at. The indicators are all pointing in a particular direction. And the sector list that I have, wow, they're all green. Wow, there's a little bit more on the table right now. That's what we're going to point out to you while the market's open. So the first one, we're going to look at the Dow Jones Transports. Now, why do we look at that one? Well, the Dow Jones Transports it has what's called components. Now, those components are trucking, railroads, airlines, transportation, and delivery services. So the Dow Jones Transports is one of the leading indicators to tell us the overall health of the economy. Because all of those things that are doing transportation, that means that money and products are moving throughout the country and throughout the world. So we want to keep an eye on that. Next, we have the Russell 2000. This Russell 2000 actually measures small and medium-sized businesses, what's known as small cap and mid cap businesses. Now, this generally moves before the bigger, broader indexes because of the size of the liquidity and the size of the stocks. They are usually high growth stocks that investors want to get involved with before the overall market, the bigger picture of the market moves. So the Russell 2000 is a leading indicator, a leading indicating sector that we watch also. Next, we have the NASDAQ. We all know how fast technology changes these days, so we want to keep an eye on technology. So we have the Dow Jones Transports, the Russell 2000, and technology as leading indicators or leading sectors that we're going to watch to tell us what's going on in the overall market. Next, we have the S&P 500, which represents the top 500 stocks in the economy. And then we have, of course, the old granddaddy, the Dow Jones Industrials. Now, something that's going to be very unique that we're also going to walk you through in the mentoring room is looking at stuff other than just the sector. Crude oil affects everything that we do, how we drive, or how we heat our houses. Next, we have the price of gold in the news quite a bit. And then we have the foreign exchange market, which is also known as the Forex market. I'm sure you've seen the news where gold is going up, crude oil is going down, the dollar is going up, the yen is going down. We're literally going to explain what that means in the mentoring room to stock prices. So you're going to be very, very knowledgeable when you're at a barbecue and you can say, oh my God, you see what the dollar did today and how that affected what went on in the market? So you're going to be very, very well informed of how to use these 6 indicators or sectors, as we call them here. All right, next, trade management. Now, before we even get into what's on the trade management section of learning how to trade, I want you to write this down. Learning how to manage trades is where the profits are, and it's how you keep the risk low. Okay, that's very, very important. Once you use the indicators in the sectors to determine how aggressive you might want to be or not be, then you still ultimately have to manage the trade. You could put on a great trade but not necessarily make money if you don't know how to manage it. So we're going to learn how to earn profits and keep risk to a minimum. First and foremost, something that's very important to understand is the entry part is only one tiny part of the overall part of a trade. So when you're looking to put a trade on and you pull the trigger and you buy 100 shares of whatever the stock happens to be, what you want to know in your mind is that it's not put the trade on, close your eyes, and it's just going to magically do exactly what you want it to do. Very, very rarely will a stock go exactly where you want it to in exactly the time that you want it to. So when you put a trade on, just automatically know that's only going to be the first beginning part of how that trade's going to play itself out. Next, we have you should expect and ultimately learn from us in the mentoring room how to make those trade adjustments. So the first part we know it's only going to be the initial step 1 of the trade is putting the trade on. The second part is to understand and expect we're going to have to make adjustments, whether it's moving a profit target, moving a stop loss, taking some of the trade off to book partial profits, or adding to a position if something really, really good is unfolding when the trade is starting to happen. Next, we have learn to judge the results based on following your plan. It's very, very common for a trader to say, oh, that trade made money, it was a good trade. That trade made bad, didn't make money, so it was a bad trade. That's not the case. A professional trader judges the results based on whether or not you have an edge, which we're going to teach you, and whether or not you're following your plan. So write that down. You're going to judge your results in the short term based on following your plan. Next, we have position size. We spoke a little bit before about the volatility of the market and adjusting your position. Some trades warrant more share size because the odds of the trade, the indicators, the sectors, and the trends of the stocks intraday are really, really obvious. Some of them warrant less. And those also have to be taking into consideration your risk tolerance. How much are you comfortable risking per trade? And we're going to walk you through that all during the day. Now, again, we're not going to give you specific recommendations, but we are going to discuss the strategies based on your experience, the amount of capital you have, the volatility of the stocks you're trading. Next, we have the entry signals. Believe it or not, as we said, the finding an entry is the easy part. And some of the signals that we use, if you're not familiar with them, we're going to teach you those as well. There's moving averages, which is the average of price over a certain amount of time. And then you have support and resistance. And to put those very cleanly or clearly, support and resistance is the last price buyers or sellers did something significant. And we're going to show you those spots on a chart as well to help you learn to manage those trades. And then last but not least, we have exiting a trade. Now here's the important part. There's multiple exits that you could be looking at. First one would be a stop loss if the trade moves against you. The next one would be a break even, or what's called in trader terminology, I took a flat, which means that you got out at the same price you got in, or your profit target. Now, believe it or not, out of the 3 of those, holding a trade to your profit target is actually the hardest one, because sometimes the emotions of wanting to take a profit factor into the trade and it messes with your head. So we're going to learn how to handle all three of those like a pro. All right, trade setups. Here's the key: exactly when to place a trade. You want to know specifically what it looks like before you put that trade on. So the first one, we want to be able to identify a low risk entry that has a high reward if the stock moves in your favor. Next, learn the open price pattern. Now please write that down, OPP. Okay, so what we want to identify is, what is price activity doing since today opened? Now most people look at price and say it's up or down from yesterday's close. We're going to teach you to learn how to spot intraday activity based on today's price action. Very, very big and core concept you're going to learn when you're in the mentoring room. Next, we're going to talk about candlesticks. Candlesticks are a visual representation of buying and selling momentum. It's either red or green on most charts. Some of them have really big bodies, some of them have really small bodies, which mean a lot of red or a lot of green. It tells us momentum, and when you really get good at it, interpreting them, it's going to help us learn how to exit and enter new trades. And I'm going to teach you that in the room as well, so don't worry about it if that's new to you. Next, we have learn which moving averages are important. There's so many different variations of moving averages. We're going to walk you through which ones we feel are the most important, because they're the ones we use. They're not only going to tell you when to get out of a trade if it's moving against you, but just as importantly, picture sitting at your seat, you're in a position, and you say, you know what? The moving averages are telling me to stay in this trade. There's no reason to take this profit. Everything is doing what I'd want it to. So that's what we're going to get to next as well. All right, combining setups with the indicators for extra confidence. So when you put together the sectors, the indicators, and the trade setups, you're going to learn to have a lot of conviction. And then last but not least on this slide here from the trade setups is identifying the key opening range. Now we talked about where it's trading from the opening price. We're also going to teach you what the opening range is to let all that market opening noise get out of the way, so you identify when it's very, very safe and comfortable to start looking to find some opportunities. All right, so which stocks are we actually going to look at? How do you build a game plan for when you get into the day? First, we want to come into the day saying, do I have a bias? A bias means, does the market have a really obvious institutional order flow? So in other words, a bias means, do you want to be a buyer or seller, or is the market in buying or selling mode, the overall sectors? So it's very important. You want that wind behind your back. Next, which sectors are showing relative strength or relative weakness? So if the overall market is very strong, which sectors or industries are following the market and which ones are not following the market? That's relative strength or weakness. Next, from those individual sectors and industries, we're going to look for stocks that meet the criteria that we're going to ultimately whittle that list down to start trading intraday and making our game plan. Now, before we talk about that, we're actually going to make sure that you have certain criteria that matches your risk tolerance and volatility for those stocks. So we want to make sure that it moves a certain amount intraday, and we also want to make sure that there is enough liquidity to manage the downside. All right, so from that list of relative strength or relative weakness, now we're going to make a list of potential stocks that you can buy intraday. Then we're going to make a list of potential stocks that you can sell short. If selling short is new to you, we're going to teach you what that means as well. It essentially means that you can make money if the market's going down. And last but not least, we're going to take all of that work and we're going to create a shorter list of the best opportunities to look at during the day when the market opens. And more often than not, depending on your experience level, that's going to be anywhere from 4 to maybe 10 stocks intraday. All right, gap trading. How do we capitalize on these extreme overnight news? Now, gap trading is actually an extension of creating the game plan that we just talked about. It's a stock that is expected to open above yesterday's high or below yesterday's low. That's actual textbook definition of what a stock means. So we're going to learn how to identify the news that might create a gap. We're going to learn how to create a game plan specifically for trading that volatility of the gap. We're going to learn to recognize what in many circles is known as a retail gap or a novice gap, which means that we're not expecting the gap to follow through. We're going to teach you what that looks like. Next, we're going to learn how to recognize what's called a professional gap, which means that the gap, let's say a gap opens higher, we're expecting that higher open to continue in that direction because there's a lot of good institutional reasons that we read about and we see in price action and volume to expect it to continue. A lot of firms call that a gap and go. Next, we're going to learn how to build a watch list of stocks to look at that match, again, your risk tolerance, volatility, and last but not least, we're going to do a little bit of gap trading for beginnings. Now, here's the lesson. You want to manage risk first. Now, gap trading is volatility. I mean, it's technically opening up a good distance from where it closed the previous day. So you want to learn to manage the risk first, and then whether it's a professional gap or a retail gap, which we're going to teach you, we'll learn how to hold those profits longer. All right, now, how to become a better trader in the mentoring. This is very, very important. You're going to see a key theme popping up here. Number one, ask questions before the market opens about the list of stocks that you want to trade. We're going to review your thoughts, okay? Ask questions that are relevant to you. Now, here's a key. Don't wait for somebody else to ask the question that you have. It's very important. Everybody has their own experience. You don't want to wait. Ask your questions prior to the market opening so you can be prepared. Next, we expect and want you to ask questions when you're in a trade. You want to say, how good is this idea? Am I seeing it right? Is my risk reward good? Should I be scaling out? Should I be adding to this? Okay. We want you to not need us. We want you to learn how to make better decisions on your own so that you have the confidence and conviction when you put money on in the market. You asked the right questions so that you could learn to come up with good ideas. Next, after the market opens, after the market closed, ask questions when we review the day in the afternoon. I'm going to give you the schedule in just a minute. All right, we want you to develop scenarios for the next time you see the same type of trade unfolding. So you want to have confidence because you're ready. So when the day unfolds, the day is done, you placed your trades, and we do a review in the afternoon, you want to say, I saw this before and I know what to do. That's what you want to picture doing at your screen. So ask questions, ask questions, ask questions. And these are the three most important times for you to do that. And last but not least, we're going to be trading too. We want you to ask us what trades we're currently in, why we think it was a high probability idea, and how you can learn and take notes on those ideas. Very important. So 4 different very, very important times for you to ask questions. All right, next, the mentoring room schedule. First and foremost, we have the pre-market strategy session. Go over the strategy for the day. Remember, we talked about the bias and the sectors. We're going to teach you how to look at those. 8:45 each day on the East Coast. We're going to discuss what the market looks like and what we feel are the best plays for the day, what you feel are the best plays for the day so we could discuss them, and any news that might be coming out, economic news, earnings, anything along those lines. All right, now we start the mentoring. The mentoring runs for the first 2 hours of the day. East Coast time, 9:30 to 11:30. So you'll be trading, we'll be trading, and we'll be having discussions back and forth on how the market's unfolding, what are we seeing in the indicators, and how aggressive we should be, or if we should be doing nothing. Just as important. All right, next, afternoon mentoring. You'll notice from 11:30 to 2 o'clock, we're taking a little break intraday, reviewing what we did in the morning, and then we pick up the mentoring again in the afternoon, and we do the same thing that we did in the morning session in the afternoon. But there's a little bit of a twist. In the afternoon, we review how the market unfolded during the morning, so I guess you can call that an afternoon strategy session. We look at which sectors are continuing to be in play in the afternoon. And then we have an open discussion of the trade scenarios that take place at the start of the afternoon. So the very same way that we looked at the market opening at 9:30 and we had an opening range at 9:30 to kind of do the same thing in the afternoon. That's when volume picks up again in the afternoon. So those 3 things are how we tackle the afternoon meeting. And then each week we schedule at least 1 formal training session in the afternoon. It's going to be based on the feedback of what you want to talk about. What topics in trading do you want to talk about? What strategies don't you understand or do you just want to learn a little bit better? What entry tactics? What moving averages? What support and resistance? How do you read the indicators better? You know, maybe some just general stuff you even pick up as well that we'll schedule, but that'll always be on the schedule, and we'll send out an email to let you know when it's coming up so you can be prepared and, more importantly, participate. All right, last but not least, we have the mentor of the trading room, the lead mentor, Mark Markey, one of the top guys around. You can see right there in the first bullet point, Mark teaches the Trading Market Technicals course that he that he authored, not that he co-authored, at multiple colleges throughout the country. You can see those on the website. He's a 24-year veteran in the market, and you can see there also he's a former member of the American Stock Exchange. He's been around a long, long time. Really passionate guy, and you're going to be very, very excited to be speaking to him and his team every day. So what I'd like to ask you to do right now is simply scroll down to the page and get started on your free trial. We're really, really excited to have you in the room. Have a great day, and I look forward to helping you become a better trader.